mind-boggling 142 million member households globally have chosen to watch the title in its first 4 weeks. So that's up notably from, I believe, the last number they issued on Squid Game was 111 million. So big gains there. The other thing I'm going to note here is they say that for the second consecutive quarter, the APAC region was the largest contributor to membership growth. It does seem like the U.S. continues to be a pretty saturated market, but they are just they're really boasting about the success of the film slate here, and they also have announced a change here. They say later in the year we'll shift to reporting on hours viewed for our titles rather than the number of accounts that choose to watch them. So that's key because Netflix has faced some criticism for noting just when people have watched the first couple of minutes of a show or a movie. So now they're going to report hours viewed. So that's a big change there. And they say we'll start to release title metrics more regularly outside of our earnings reports so our members in the industry can better measure success in the streaming world. So notable shifts there, trying to have more transparency about what people are watching. Wilf, I'm going to continue to dig into this report, but we see Netflix shares up about 1.5%, 2%.
I love when they talk, Julia, also about the competition. They compete for time and attention, watching linear TV, reading a book, browsing TikTok, or playing Fortnite. But one example, and this is fascinating, on October 4th, when Facebook experienced a global outage for several hours, remember that? Our engagement saw a 14% increase during this time period, which is actually pretty amazing that they can track that competition between social media and Netflix. But there's a lot to like here, whether it's the global subscriber ads or the earnings guidance especially.
Yeah, I think the fact that they beat the last quarter's net ads by 500,000 and still didn't say that it pulled forward from next quarter, and the next quarter's guidance was just as high, shows you they have confidence. We're 3 weeks into the current quarter. They have their their algorithms. They know what the search volumes look like. So that's certainly positive. It's funny though, Netflix always wants to kind of point out how much people watch and also how small Netflix is relative to everything else going on in the world. So, 8%, I guess it is, or 6% of total TV viewing time, including broadcast, cable, and everything else. That's what they want to point to, even though they have much more than any other streaming
Or
platform.
book reading or TikTok watching.
The stock is up nearly 2%. Let's bring in Mark Mahaney, head of internet research at Evercore ISI, and Ed Lee, New York Times assistant editor, to discuss their takes on these numbers. And Mark, I'll get your reaction to the numbers. First of all, as we've been discussing, all very largely very positive. If you're looking for an issue, US, Canada, essentially no net ads there in the quarter.
I think that's right. Also, expectations were obviously super high going into the print, especially given all of the data points around Squid Game. So these numbers are good enough to cause the stock to go up modestly. We think there'll be follow through. And I think if I want to put this in context, it's this. This will be the 4th year in a row in which Netflix will have added somewhere between 8 and 9 million subscribers in the December quarter. That's pretty impressive for a company that's now north of 200 million. What it tells you is that the growth rate, kind of the secular growth, execution growth behind Netflix is very consistent pre-COVID, during COVID, post-COVID. And investors like consistent growth businesses, especially premium consistent growth businesses. It's one of the reasons we're bullish on the stock.
Unsurprisingly, Ed Lee, they're talking up Squid Game and the kind of extraordinary numbers. Their #1 program in 94 countries, 142 million member households.
Yeah, I just want to give you the latest on games here because, of course, we've talked so much about how, indeed, Netflix will handle its expansion to games. They say they've begun testing games in select countries. They say to remember that games on Netflix will be included in member subscriptions, will not have advertisements or in-app purchases. So gameplay is purely focused on enjoyment versus monetization. And they say they plan to try different types of games and to learn from members and improve the game library. Also, just some commentary here on the delays due to COVID. They say assuming no new COVID waves or unforeseen events, they anticipate a more normalized content slate in 2022 with a greater number of originals next year than this year and a release slate that is more balanced over the course of the year compared to this year. So, of course, Wilf and Sarah, what they're talking about there is the fact that the content was so much shifted towards the back half of this year because of various COVID delays.
Julia, thanks so much for that. Mark, I wanted to come back to, so APAC had 2 million paid net additions. Would we not have expected more than that, given Squid Games and Korea and it coming from over there?
I think that's a reasonable point, and I think the key thing for Netflix is Netflix has shown phenomenal success in North America, in Western Europe, in Latin America. Where it's not yet proven is in the Asian market. Now, I know that's a lot of different countries. It took them several years to really crack the code, get above 10% in Japan. I think Korea, they've actually done reasonably well. India is a slog for them. So the extent that there's new growth to be had, it's probably going to have to come out of the Asia-Pacific region. If they can show that that's their fastest growing area, I think investors will view that as a positive. But that's the toughest market for Netflix today. They've done phenomenally well in other markets. Investors want to see the proof in the Asia-Pacific markets. Maybe you got a little bit of evidence of that today.
So how long can they keep it going, Ed, when they get a huge hit like Squid Game, which is, according to them, the biggest one they've ever had? How many quarters does that add up to in better subscriber growth before people are wondering how you're going to follow that up?
Well, how are you going to follow that up? I mean, if they do a if they do a second series, I mean, that's fine. I mean, if they do a second series of Squid Game, I mean, which it looks more likely than not, I mean, that they haven't greenlit it yet, right? So it takes that much longer for that second series to come out and for them to sort of, sort of ride the wave of the popularity of this sort of what was a sleeper hit. So I do think, for them, though, for Netflix, it's very much a numbers game. The more we spend, the more likely we'll find that one rare hit that like storms the globe the way that Squid Game did. But they don't know themselves until they produce it. And so they're doing things like they're sort of buying up studio lots, or they're actually renting out a lot of sort of the infrastructure of Hollywood that to the point where others don't have any more space. Other studios can't make use of sort of a lot of the Hollywood infrastructure to make their show. So they're just anticipating, look, we're going to spend that much more money. Yes, a lot of them may not be hits, but we just need that one or two or three to do it. And they've got the cash flow now, right? They're a self-funded company finally. So it's just much more of a juggernaut, I think, for them.
Anastasia, what's the read across for the rest of the sector here?
Yeah, look, I think it's still an important sector with still a lot of growth that's still left ahead of it in the direct-to-consumer streaming. It's interesting because even now when you look at the numbers, 64% of the U.S. households still have a paid TV in their household. So I do think the substitution potential is still there. And all that we're talking about right now, whether it's Netflix or other streaming companies, they're spending so much money on new content that, as Ed was saying, some of it is bound to pay off. So I do think it's a very important industry to watch, and especially as it penetrates in Asia Pacific, especially goes to mobile users as well. I think there's just a lot more levers that the streaming industry can pull.
Mark, it was up 2%, now up 0.8%. What are the key things on the call for you?
Well, I think that expectations were super high. They kind of met them. The question will be the follow-up. The follow-through. The one thing I haven't figured out yet is what happened to ARPU. So those new customers, did they come at a materially lower revenue per user? Remember, there's two key things, new things we're watching here. One is gaming. Julia talked about that. The other one is they're rolling out more of these mobile plans in parts of Southeast Asia and in Africa. So I don't know if there's any detail in the letter, or maybe one of the analysts is going to ask about this, which is, what kind of traction are you having for your mobile-only plans, lower price plans, but those can, you bring people in and you can build up the service that way. I think that's going to be key. This company needs to get to 500 million subs. We think they can do that over time. They need to be able to show that path with $30 in earnings. We think they can do that by 2025. That's why there's still a lot of upside on the stock from here. But those would be kind of the small behind-the-scenes details I'll be looking for in the notes and in the call.
Mark, Ed, Anastasia, thanks so much for joining us.
Thank you, Wilfred.
Up next, Interactive Brokers shares falling after hours as they just reported numbers. Chairman Thomas Petterfy will join us to discuss next. Plus, we'll break down United Airlines results when the carrier reports due in just a few minutes. Closing bell back in a couple.